So there's a difference between looking for a trade and anticipating a trade. Looking for a trade means you're looking for something. Anticipating a trade means you know that this thing is coming, so you want to position yourself in the best place or in the best position so that you can get it when it comes. Okay, they are two different things. Now, most traders look for trades, but professional traders anticipate for trades, and there are ways to anticipate for trades so that you don't end up chasing the market. And when I say looking for trade, what do I mean by looking for trade? You open the chart, you have a strategy, you open the chart, and you just want to look for the strategy and trade it immediately. So you don't even want to see how the strategy started, how the strategy began to cook, how the strategy cooked, and how the strategy brought an entry point for you and all that. You don't want to wait for that. I'm not saying it's wrong, but most of the time, because you are not there in the beginning of the narrative, are you following me? I don't know if that word is correct. Being that you are not there, you are not in the market when that strategy start cooking or start presenting itself. Are you following me? You most likely are going to end up in loss because you don't know, you don't really have a narrative towards why you are taking the trade. For example, if change of character is your strategy and all you're just doing is that you just come to the chart, look for a change of character and execute, yes, you might actually get it, but most of the times, because you don't anticipate, you are looking for, let's say you just mark this thing, I want to sell it, yes, you might actually win it, but more because you are looking for, you might not get quality setups. When you anticipate, you get quality setups. Now, you all know my strategy already. I'm going to use my strategy to explain to you how I anticipate the market. Now, this is what I do. It's very, very simple. I just want to look for the trend. So what's the trend here? The trend here is bullish. Okay, let me use here because there's an entry here. Let me use here. Now, what's the trend here? The trend here is bearish. Okay, I can actually tell. If I just zoom this in out, I can actually see that, okay, this market right here is bearish. Okay, so what's the next thing I'm gonna do? The next thing I want to do now is look for areas. Now this is a downtrend. All we all agree that this is a downtrend. I want to look for areas where the market pretended to actually, or areas where the market looked like it wanted to change character. Now it's very, very easy to do that. Assuming this market was just around here, sorry, my this is not paid yet. Assuming this trading view was just around here, are you following me? And this market is selling at this point. How I anticipate my setup is this. I'm going to start marking out, because the character of a downtrend is lower highs and lower lows. So I'm going to start marking out my lower highs and lower lows. So if I start from here, this is my lower high, this is my lower low, my lower high, my lower low, my lower high, my lower low, my lower high. I'm going to keep marking this. Now this is my lower low. Good. Now let's see what happened here. After this lower low and a downtrend, I'm not expecting the market to take out a lower high, but what happened here? Market did what? It took it out. So it's either this is going to be a change of character or it's going to be a liquidity sweep. Either one of them. So I want to know what that's going to be in the future. So you wait. Now I've marked out my lower high and I've seen that market has gone above and taken out that lower high. So is it going to be a change of character or is it going to be a liquidity sweep and still break straight to the downside? So we're just going to wait. So I'm going to watch this market till the market does what? Comes and takes out the previous lower low. Okay, now when the market does that, taking out this previous lower low, let's see whether it did it. It continued moving and then boom, it took out the previous lower low. At this point, I already know that I am strongly bearish, because at this point we are expecting market to reverse up to the upside, but it couldn't continue and reverse to an uptrend. It broke down, meaning that we have more supplies in the market, so meaning that we are having more sales. So it's easy. What's the next I want to do? Being that I've identified here, I've identified the break of structure, which displays that the market broke. I now want to look at the other block that caused the break of structure, or a Fibonacci level, that is my 0.5, where I'm going to take my trade from. If I'm using other blocks, I'm going to use this block to take my trade. So I'm just going to expand it, because that is the last other block. I'm going to use this block to take my trade, wait for market to come back to the block. Anything I'm doing, my stop loss will be above here. Okay, now let's see, market came back to the block. Good. Then your stop is going to be above here. You target your 3R. Okay, If you don't want to use the block, you can use your fib. How do I use my fib? I draw from the previous high to the previous low where the market broke structure to. Draw it like this. Then from 0.5, I'm taking my trade from here, from 0.5. So if market taps into 0.5, this is it. I take my trade from here, put my stop loss above here, and target at least 2 to 3 hour. Let's see, this is 2 hour already. 2 to 3 hour. Good. You can see market down to 2 hour and you're out. If you did 3 hour, I'm very sure market still made some dumps. Okay, it didn't make any dump. Good. But 2 hour, at least it gave you 2 hour and you're out of the market. As easy as that. So your work is just to identify the trend, wait for a change of character. When the market gives you that change of character, wait for a breakthrough to the upside, and then, only then, are you allowed to now decide to take a trade or not. It's as easy as that. You only anticipate. As this market is moving up here, as this market is making higher highs and higher lows, be marking out the levels, the major liquidity that is driving that uptrend. Anytime there is a fake change of character and the market now liquidates to the upside, you have a trade. Is either the market comes down and mitigates your entry and goes up, or it doesn't come down and mitigate it, or it comes down and mitigates it and you hit SL. But either way, the strategy is going to keep you on a profitable let's call it road now. It's going to keep you profitable in the long run if you maintain this approach. So if this video was helpful, subscribe, comment, and tell me if you have any question. You can ask a question under the comment, and I'll stay tuned. I'll be dropping more videos on this channel. Thank you so much guys for watching. I appreciate it.